Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's Friday and we have Charu Chanana, market strategist from Saxo Markets in Singapore. Charu, good afternoon and great to have you on the show.
Thank you, Brian. Thank you for having me.
Now, Charu, before we get your insights, let's take a look at how crypto markets are performing and also how regional markets look like. So we have Bitcoin, which is at 23,942.4. It's down 2.39%. Ethereum is at 1,892.53. It's down 0.02%. Now, looking at across the regional stock markets, Thailand today is closed for a holiday. So we start with the SGX, which is down 0.94%. Bursa Malaysia is up 0.18%. Shanghai is down 0.07%. The ASX All Ordinaries is down 0.64%. The Nikkei is up 2.35%. The Hang Seng is up 0.42%. And rounding up the numbers, we've got the Kospi, which is pretty much unchanged. Charu, what's your view on the mixed view of markets this morning?
I think for Japan particularly, there's some, lagged effect because it was on a holiday yesterday. But at the same time, the mood is quite sober right now because I think from last night when US PPI numbers came out, the reaction in the Wall Street was pretty positive. I mean, but it got reversed later on. So I think the markets in Asia right now are just taking a little bit of a breather to see what Fed thinks of these numbers and where the Fed rate hike expectations go from here.
And the US jobs numbers as well and the inflation prints really sort of gave rise to the fact that now our expectations of a 50 basis point or 75 basis point, what does that look like right now?
So if you dig down deeper in the inflation numbers, at least the CPI report that we saw earlier this week, the major drop has been coming from the energy side. Even in the core print, which actually excludes energy, the drop is coming from the aviation sector, which is again, it's a secondary effect of lower fuel prices, right? So it's overall it's a drop because of energy. But what is actually still keeping inflation numbers high is the shelter cost. And they're really sticky. They usually rise late in the cycle and then they kind of stick on for a very long period. So that, of course, gives us a sense that inflation has not peaked yet. There's still momentum there. But also, I think if there's another thing to consider here would be the financial conditions. And that's something we very closely look at, at Saxo. The financial conditions are easing because equity markets are rising, yields have dropped. So because of all that, and that kind of brings inflation back again higher. So all that will continue to be a concern for the Federal Reserve. And the jobs market is signaling a tight labor market. So that gives them ammunition to continue to, hike rates.
Now, what is the outlook like for earnings in the second half of the year? Earnings have been pretty strong still in the US. What's Saxo's take on that?
So earnings have been strong, or rather, I would say they've been better than feared. Of course, expectations had been revised to be much weaker. They did manage to meet, most of the companies, the big ones, they managed to meet those expectations, and that's why we've seen a positive reaction in the equity markets. But the guidance has been still quite weak. So I think we should be, ready for a suboptimal kind of H2, where, of course, a weaker dollar might help a little bit, but the demand destruction is going to be more prevalent, and higher prices may not be able to stick through for the company. So I do think that there's going to be more drag to come.
And then now looking ahead to equity markets, what's your outlook for equity markets, and which sectors do you see are going to outperform the rest?
So in terms of U.S. equities particularly, we do see an array of risks like we just discussed. I mean, there is potentially much more room for the Fed to hike rates from here, and we've seen a lot of Fed speakers kind of pushing back on easing expectations for next year. So they do remain in an inflation fighting mode, and that will continue to bring the yields higher and weigh on the equity markets. Secondly, I mean, Fed's quantitative tightening is also a big factor to consider. We haven't, seen that come at a full run rate yet. So the mechanical impact of that is not seen in the markets yet. And when that comes to the markets, it's the liquidity is going to be drained out much more significantly, and that again is another, bearish factor to consider for the equities. And the earnings momentum, that again we've already discussed that. I mean, most of the companies have guided for tougher macro conditions in the second half of the year. So that continues to signal that there will be some pullback in the markets that we are seeing. I mean, right now is only the momentum trade, and people are continuing to pile in into that trade. But our sense is that it is nearly topping off now, and there should be a reversal coming sometime soon. So in that scenario, of course, I think it remains important to stay defensive. At Saxo, we are overweight commodities, we are overweight defense. These are the two sectors that I think I would like to highlight here. Commodities, of course, I mean, we've seen energy companies give solid shareholder returns in the second quarter of this year as well. And their valuations are still cheap compared to the forward cash flow generation capacity that they have. So I think energy companies remain quite interesting at this moment still. And of course, defense, like I said, given the rising geopolitical tensions since the Russian war, but now also within our region, here in Asia, with China-Taiwan tensions picking up, there's bound to be more and more focus on defense spending, and that should help defense companies as well.
Now, Charu, then, closer to home, what are some of the key risks in Asia right now that we should be watching out for?
Plenty of risks, actually. I mean, again, if you look at the Western markets, the Fed tightening, Europe facing an energy crisis potentially, the UK, Bank of England has already guided for an economic recession that could last for 5 quarters. All of those risks are going to play into the regional markets as well, because that kind of hampers their export demand. But at the same time, inflation here in the region is also, running above targets for most of the central banks. So we can expect a lot more tightening in Southeast Asian countries, to kind of combat those inflation threats. But at the same time, I would like to say, I mean, there are a lot of pockets of opportunities. I personally think Asia is pretty resilient this time to all these macro headwinds compared to the global financial crisis or the Asian financial crisis. I mean, we have stronger FX reserves in Asia. We have solid balance sheets. So that should help a lot of the Asian economies to, wipe through this current crisis. I would particularly highlight, I think, Singapore, which is a safe haven. I mean, of course, we've seen a downgrade in GDP growth forecast for Singapore, but it's a key safe haven, and it is a market which will remain very important for investors, also with these rising geopolitical tensions in the region. Then, of course, Indonesia has a lot of minerals and commodities exposure, so it could be prone to a pullback in commodity prices. But over the long term, I would say Indonesia presents a great opportunity as well.
Now, Charu, thank you very much for coming on the show, and thanks for your insights.
Thank you, Brian.
Now, we've been speaking to Charu Chanana, the market strategist from Saxo Markets Singapore, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our syndication partners and social media platforms. Please like and subscribe to our various platforms. Thanks again for tuning in.